ProShares put out a new ETF, and the first dividend was insane, yielding roughly 18.7%. Crazy. A huge distribution rate, which I love to see, and we've seen some great things from ProShares in the last couple of months. So today we are doing a video on $10,000 invested into this brand new ETF. It's going to be a little speculative because we only have one distribution so far, but I want to give you all the details and see how much money you could make if this continues to perform as it has. So as always, thank you so much for being here. I hope you guys enjoyed the video. If you like dividend investing, stocks, ETFs, all in all, just making money, don't forget to like the video and subscribe, and check us out every Wednesday for our lives, which we'd love to see you guys there. So let's jump into this new ETF and see what it can do. I'm sure you guys have heard of ProShares. If you haven't, they have a couple of really popular funds. Probably the most popular, I would say, is iSpy, ISPY, and IQQQ. Those ones are some of their ETFs that do really well. And now we have ProShares Russell 2000 High Income ETF. We can see over the past 6 months, although it's only been trading since September, so the 1 month chart's a little bit more accurate, but it is up 5.52% since the inception of the ETF. Now, ProShares is a lot more consistent than a lot of other ETFs, and so I'm happy that they put this one out. If you guys are familiar with a lot of the other ones like the NEOS funds or even the Roundhill funds, even though those ones pay weekly and this one doesn't, it's very similar how they're writing their option contracts. And so we can see this one again is on the Russell. The other ones are on the NASDAQ and the S&P 500. And so when it comes to the Russell 2000, it's usually a higher risk. And by that, I mean there's higher implied volatility. And because that is the case for so many of these funds, it's nice because the option contracts, you can get a lot juicier premiums. And so by juicier, I mean higher. And higher premiums, the more money you make and the more money they pay out in distributions every single month. And so I am happy to see this one. The other two, like I said, have been performing pretty well. And so I'm glad that they are putting out more and more of these very, very interesting ETFs so we can have more and more monthly income. So if you guys like this, don't forget to check this one out. Do your own DD. Make sure you're doing all your own research. It's not financial advice, but I think this one has some crazy potential. So we're going to run quite a few numbers on it, including calculating our own dividend yield. Because it is so new, we're going to be very speculative on the returns. Now, if you guys have been to ProShares website, it's a very beautiful website. They don't have just the distribution rate thrown up on here, but you can see since the inception of the fund, if you had invested $10,000, you would currently have $10,600. You'd have a 6.74% return just since September. So that's pretty solid for sure. Expense ratio is a lot lower than the other funds that we've been seeing at 0.55. It's literally even less than half of what some of the others are charging right now. And you can see all the data on here. As always, go check out the website. Let me know what you guys think. And you can see the NAV change, price, all of this, trading volume. And then we can go down here and see the exposures. So we know that it's going to be probably similar to the other Russell funds: finance, healthcare, industrial, tech, consumer, real estate. You can go in and see all of the holdings that they have. They own Sprouts and, just a ton of these. And then you also see the call index. And now when it comes to what they're owning, you can see like Sprouts, Farmers Market. These are a lot lower. FTAI, Aviation, a lot lower, not even a full percentage. So very, very interesting. And then you see the E-mini Russ 2000 equity. Continuing to scroll down, their distributions, we see they had one distribution so far, and it was 66.6 cents, which is crazy. We're going to go in and not take a look at the dividend history, but we're going to run our calculation and see what this is in relation to the current price, as well as what you can expect to get financially every single year from the dividend alone. Jumping on to Seeking Alpha, let's full screen this. We can see we have the price right here. Now, again, all over the internet, I found it ranging from about 16% to an 18% return with the dividend. And again, this is all very, very speculative just based off the one distribution we've seen. So currently, I think iSpy is yielding 8 to 9%, and IQQQ is roughly around there as well. I have videos about those also if you're interested in those funds. And so we're going to run some numbers. So we can see that this paid out 67 cents. We're going to do 0.67. We're going to multiply this by 12, and this is going to give us what you're going to be paid every single year in distributions if it continues. Now, so $8.04. To figure out our actual percent dividend, we'll divide this by the current price, which is $41.97. That is going to equal 0.1915. You multiply that by 100 to get your percentage, and we can see we're yielding 19.15%. Now, the beauty of this is just the dividend. If we add the 6 point something percent, you're really getting a 25% return on your money year over year. But again, it's very, very speculative, but it is still very fun to think about this and to look into this fund and see how it has been performing. So what we're going to do is we're going to throw this into our calculator, and we're going to plug in all the information and see exactly how much money you would get if you invested $10,000 just based off the dividend returns alone. And I promise it's probably more than you think. We are over on MarketBeat's calculator, their dividend reinvestment calculator. And I'm going to say this, I say this in every video, this is all speculation. And especially because ITWO is very, very new and this dividend was huge, it's not likely they'll continue to pay out this exact number. So this is all based off of the speculation that they'll trade sideways, and there's so much that goes into this. So like I said, ITWO has gone up in price by about 5-6% since inception. I'm not going to factor that in. So that's going to be a bit of a safety buffer. We hope with these funds to not see any NAV erosion, and we haven't seen a lot with the other two popular ones by ProShares, but I'm going to factor out price increases and just go off the dividend yield that we calculated. So that being said, if you were to throw $10,000 into this fund, you would purchase 238.3 shares. Now, we're going to do 0 annual contribution, 0 tax rate, because I'm investing in a Roth IRA, so I don't pay taxes on my money. When it comes out, I pay it when it goes in. And then we can see all the information is plugged in, individual stock, monthly distribution, and DRIP is turned on. So then we have our 1 year invested. We have 19% in our dividend yield. And you can see that with your $10,000, you quickly gain a 20.75% return, and your money goes to $12,075. Total dividend income is $2,505, which is phenomenal. Your yield on cost is very solid. And this is very, very hopeful, like I said. But let's say you hold this for 5 years and it continues to trade sideways. What you end up with, it's taking its sweet old time to load. What you end up with after 5 years is $25,667. This is when it really gets crazy, because that 20% yield over time with DRIP on, you're going to continue to recoup your money from this investment over and over and over again. So you see in 5 years, you've more than doubled your money, which is far above the market average, far, far above it. So we can see total return is 156.65%, and annual dividend income has now reached $5,224. You're now making almost $6,000 every single year. But it gets better. We're just going to keep going up. Let's say after 10 years, you're $25,000. It's just taking its sweet old time today. We're going really slow. Oh, your yield on cost is up too. But now, after 10 years, your ending balance is $65,000, almost $66,000. You've almost 6x your money. You've 5.5x your money. And we can see the annual dividend income is now $13,600 from a $10,000 investment. How would you like to make $13,500 every single year from just doing nothing, from just your passive income? And your total dividend payments over the last 10 years have been $51,000. It's crazy. And this, guys, is the power of compounding interest. And your yield on cost is now 113.17%. Oh my gosh, just jumping 5 more years, we get up to $170,000. And now, hear me out. Your annual dividend income is $35,000. $35K. From a $10,000 investment 15 years ago. And the beauty with this is $35K is probably pretty close to the average take-home salary. And if you're investing in a Roth IRA, you're taking that money out tax-free. Total dividend payments over the 15 years, $145,000. Yield on cost, 290%. So we're going to jump all the way up to 20. And I just know this is going to be insane. Yes, it is. After 20 years of your 19% DRIP, over and over and over every month, you're reinvesting that money. You have $434,000 invested, a 4,000% return. That's not easy to do by any means. And now your annual dividend income is $90,000. $90K. You could buy an insane sports car every year just with your dividends. Your dividend payments over the last 20 years are $388,000. So, what I always like to do is I like to say, oh, let's say that you're 25 and you want to retire at 55. And so you invest 10K into ITWO. It yields 19% across the board. Price appreciation up and down, but it always balances out. And you're continuing to drip. You don't take any of that money out. Well, after 30 years invested, you are going to end up with the insane amount of money, $2.86 million. That's retirement right there. That is your retirement. Your total return, 28,500%. Annual dividend income, $600,000. A little bit under $600K a year annually. And so the beauty with this now is you can take $300,000 out a year and still reinvest your $190,000. You would still be set. And so that's the beauty of it. $290,000 actually. That's the beauty of it. You are able to live freely just based off this investment. And again, this is all for fun. It's all speculation based off of how this one has performed with just one measly dividend and a few months of trading. But still, over 30 years, your dividend would get you $2.6 million total. $2.6 million total, and now you live scot-free. So that's the power of compounding interest. I always love these videos to show you guys the new ETFs that are on the market, the power of compounding interest, and just the ability of financial freedom when you guys put your money where it should go into useful things like the stock market. As always, do your own research. Let me know what you think about this new ETF down in the comments, and I'll see you in the next video.